It's finally happened. The sands have shifted. And I think this is a really, really big opportunity to get involved in the crypto markets. Hello and welcome back. Over the last couple of days, a few key metrics have flipped, leading me to believe that this is one of the best opportunities that we have seen over the last couple of weeks to get involved in the crypto markets, and in particular Bitcoin. So let's jump straight into the charts and break down exactly what's happened and why I think this gives us such a big advantage going forwards. So Bitcoin currently trading at a price of $66,300. We are down some 6% from highs put in a couple of days ago after we rejected key resistance at $70,000. That price was very, very important. Why was it important? Well, a break of $70,000 would have broken us out of the technical downtrend that we've been in on the daily chart since the all-time highs were put in towards the middle of March. Just to break that down for you, all-time high put in on the 14th of March, then we made a low, then we made a lower high, then we made a lower low, then we made another lower high, then we made another lower low on the 5th of August. Lower low, lower high, lower low. That is a downtrend, technically speaking. And a break of $70,000 would have technically reversed that downtrend. We failed to do so. We're down about 6%, but is it time to panic? I don't think so. Let me explain why. So first of all, a pullback of this magnitude is perfectly healthy. We're still technically in an uptrend since the 5th of August, where we put in this low, the lowest low from that downtrend since the all-time highs. We came up and we made another high on the 23rd of August. Then we came back down and put in a higher low on the 6th of September. Then we put in a higher high on the 28th of September. Then we came down, made another low, and we broke those highs on the 15th of October, cementing that uptrend. So technically speaking, first of all, that uptrend will persist until we break this low here at $58,900, the one that we put in on the 10th of October. Now, the second most bullish scenario, bar breaking that 70K resistance to the upside, would have been a flip of this downtrend drawn across the highs put in since the all-time high. That is the top of the downtrend, if you will. Generally speaking, this isn't something that I would like to trade. I tend to keep all of my lines as part of technical analysis horizontal. But when you see strong trends like this over multi-day time horizons, that is something that's worthwhile paying attention to. Now, the next key level to the downside, or the next most bullish scenario, would have been a flip of former resistance. That is this former resistance from the high put in towards the end of September at $66,500. A resistance support flip is generally a bullish signal from a charting perspective. And we did in fact come back down to retest and reject this level once on the 17th of October and then again on the 21st of October. Arguably again yesterday on the 22nd, and today, just now over the last couple of hours, we did break down through that level. The next key level to the downside and the next key resistance turn supports would have been down here where we've just rejected at 65,000. We came very, very close to that over the last hour or so. On the Coinbase chart here was $65,200. So we missed that by just a couple of $100. And as I always like to say, prices don't really move because of lines drawn on a chart, although there is an argument to be made for the psychological element of technical analysis. And if everyone's doing it, then arguably it can come true as part of some sort of self-fulfilling prophecy scenario. But the real reason why we bounced here was because of liquidity, because of supply and demand. These are the fundamental forces that drive markets. And liquidity manifested in the order book is the best leading indicator that we have of supply and demand, because it's where we can see where market participants are placing their order or advertising their willingness to buy and sell at particular prices. And just about an hour or so ago, we saw peak liquidity over on Bookmap down at $65,000. Now, based on this and what we're seeing here, I don't think the bounce that we've just seen of around 1% from those lows at 65.2 is necessarily likely to continue. I think it's likely that we will see a little bit more downside before we turn around. And that is simply because there's still a lot more buy-side liquidity a little bit further down the book than where we are right now. We are looking at the data here specifically for BTC, USDT, Binance futures, right? This isn't for the market as a whole, but nonetheless, you can see from where we are right now at a micro scale, liquidity is somewhat balanced. And then if we go down the book a little bit, you can see something of a gap or a dip in liquidity around 65.5. And then below that, you can see peak buy-side liquidity comes in somewhere around $64,800 or $64,700. So a little bit lower down the book than where we are right now. There is more buy-side liquidity, and generally speaking, that would be a place where price is likely to turn around from now, particularly as we have that gap in liquidity below us. That means there's slightly more sell-side liquidity immediately above slightly less buy-side liquidity immediately below, and then a lot more buy-side liquidity down at those prices that I just mentioned, around in that $64,700, $800 region. So based on that, I do think that it is likely we're going to see some more continuation of this downside, at least if that liquidity persists. But really the message is that's perfectly healthy from where we are right now in this uptrend from the lows that we put in on the 5th of August. And really from a technical perspective, I remain bullish on this as long as we don't break this low here at 59,000. And that is to say, I remain bullish in the micro sense, right? Bullish in the next couple of weeks time horizon, say. As long as we are pulling back and we're not immediately breaking down below here, that still looks like a buying opportunity to me, right? Because all of this is really fair game, particularly when you look at the liquidity and when you look at how we've consistently rejected these prices to the downside. On pullbacks, we've rejected these prices again and again over the last couple of weeks. But the key thing that really stands out to me in the markets right now, and the key metric that has flipped, is the liquidations and how leverage players are positioned right now. So as you can see, there is just so much more short liquidations above us than there are long liquidations below us. And that trend persists if we look at this from a 7-day time horizon as well. And what that means is there are a lot more leverage shorts in the market right now than there are leverage longs. Up at that key $70,000 resistance, there's now $2.6 billion worth of short positions waiting to be liquidated. And if we look to the downside, there is just half of that in terms of long liquidation risk at $63,650. And if we look back on the chart, that comes in at somewhere about half of what we've got to lose if we're going to maintain this uptrend, technically speaking, from the lows put in towards the 5th of August. And that is rather conveniently around $3,000 to the downside, whereas of course the key $70,000 resistance is about $3,000 to the upside of where we are right now. All that to say, an equal $3,000 price move from where we are right now would be much, much worse for the leverage shorts. Well, there's a lot more short liquidation risk to the upside than there is to the downside, and it's about half of that to the downside. And the reason that is so important is when a short position becomes liquidated, the trader is forced to buy Bitcoin, in this case, to cover the short position, meaning there is a sudden supply shock on the market because there's suddenly increased demand. People are buying on surprise. And that scenario means increased demand, steady supply, prices go up. And when we get several rounds of short positions becoming liquidated successively, that is when we can see prices really rip to the upside. That gets increasingly exciting as we approach the all-time highs and with it price discovery, because once we start breaking those levels, then FOMO kicks in, then mainstream media starts talking about Bitcoin again, then your average normie on the street starts dusting off their Coinbase account and new money comes into the market, again increasing demand, and supply remains steady. And that's when we have the opportunity for these massive parabolic moves to the upside. Now, I've spoken about and I've observed many times before this asymmetry in leverage in the market. But what is particularly fascinating this time is that this hasn't been met with the usual mass panic that we see represented in the fear and greed index. Now, sure, yesterday was a net outflow day for the spot Bitcoin ETFs to the tune of $79 million. Do note that was led by ARK. BlackRock's still accumulating, and they have been since the 11th of October. But usually we would expect this massive net short interest in the market to be met by a sudden change in market sentiment, in this case panic. And we'd usually see that represented in the fear and greed index. But look at this. Fear and greed index still in greed at a score of 71 out of 100. In fact, we are now, as of the time of recording, more greedy than yesterday. Now, of course, this is a somewhat abstract measure. Okay, it's multifactorial and it's also lagging. So I do expect this to come down somewhat, particularly if this move to the downside sustains. But nonetheless, this represents a pretty stark difference to what we've seen in the past. What we've become accustomed to seeing over the last couple of weeks is very sudden changes in fear and greed index matched with sudden changes in where the leverage is in the market. Now, what's happened this time, we've got that sudden change in where the leverage is in the market, but that has not been matched this time by a sudden change in market sentiment, at least as far as we know by the fear and greed index. And that, for me, bodes very, very well for the continuation of this move to the upside. If not necessarily in this bounce that we've seen in the last couple of hours, but at least over the next couple of days if this trend persists. Because basically this is numerical data, right? There are more shorts in the market than there are longs, and there is a higher short liquidation risk to the upside than there is a long liquidation risk to the upside. But if market sentiment persists, that for me just increases the likelihood that we are going to take out those shorts to the upside. They might not necessarily become liquidated, but they do have to close if they're not going to become liquidated. And the only way you can close a short position is by covering and therefore buying. So the next two things that I'm going to be watching to see if this is going to play out are the print for the 23rd of October on the ETFs. Did we have a net inflow day or did we have another net outflow day? We're going to see how much the fear and greed index comes down in the next 3 hours. I assume it's going to come down, but maybe it won't. Maybe it'll go up. It's possible. And from there, of course, we're going to be watching the liquidations and seeing how this changes. Now, as I've said, there's plenty of liquidity down at around $64,600. This bounce might not necessarily be continued, but what we have seen in the market sentiment and what we've seen in the leverage in the market is a very significant shift. And I think it is very much a shift to the bullish side. So given that we've had something of a 6% decrease in price, that for me represents a pretty interesting buying opportunity and one that I very might well look to get involved in if this continues playing out the way that it is so far. That being said, as always, nothing I say should be considered financial advice, but thank you so much for watching. I really appreciate it. There's plenty more to come. Catch you in the next one. Cheers. Bye.